In today's video, I'm giving you guys an update on the New Zealand dollar opportunity that we talked about last week, where we're seeing this market start to break down so far this week. I'll share my thoughts on where this market could be going, some key levels to watch, and also targets, as well as the latest on the DXY. Now, if you guys do want my help with your trading, including seeing my trades in real time, daily videos, exclusive setups, and also full access to the course that I just launched, if you want lifetime access to all of that, click on the link at the top of this video in the top right corner, and that's going to give you 90% off lifetime access to the trading course and also the group. So you can also see the link in the description of this video, or if you're on the website, click on that join VIP link. It is a limited time offer, guys. And look, it's lifetime access. Even if you only spend a year in there, it's going to come out to less than $1 a day to learn. If you stay in there for multiple years, then it's even less. So the choice is yours. I can't guarantee that you will be a successful trader, but of course, if you do want to improve your trading and learn from somebody who is profitable like myself, then join us today. All right, looking at the New Zealand dollar, guys, we are seeing the market still just range bound here. This is what we've discussed here over the past few weeks. And the last video that I made on this pair, what you guys will remember is that we were looking at the price action here as a potential rounded top. Now, you could call this a head and shoulders if you really wanted to, but really, to me, this is more of a rounded top or a potential rounded top here for the NZD. Now, we also looked at how this right here was very similar to the price action that we saw back here in this area earlier in the year. And you can see that we even have a very similar short-term trend line that broke down back here. We got the sell-off. And so far, what you're going to see here this week is we have a very similar trend line that I talked about a couple times over the past week. And you can see where we did get a breakdown here on Wednesday. Now, what's interesting about this is the exact same trend line that I talked about last week. And notice where the New Zealand dollar tested today. Okay, so we have support that built up through here. And we had the close below on Wednesday. All right, so close below here on this red candle and retest as new resistance here today. So right on the dot, we got the retest, and so far the market is starting to sell off from this area. Now, here's the key though with this pair is, and this is not financial advice, it never is, but if you were unable to get in up here in this area, okay, either before the breakdown, front running a potential breakdown, which you could do given these lower highs that we saw develop into the level, or if you got in on this retest, then I think those are decent entries. Okay, in other words, if you were able to get in up here, then I think those are decent entries. Now, if you are chasing this right here though, the challenge with that is that you've got this 60-50 level down here that we talked about last week, and you would have to put your stop loss, in my opinion, not only above today's high, but ideally at least, 2 or 3 candles back. So either up here or up here in this area. Now, if you do that, what you can immediately see is that your risk reward is unfavorable because it's not even a 1-to-1. Okay, so the point here is that, and this is just my opinion, but the point here is given how significant 60-50 has been, okay, down here, if you are trying to short this down here in this area, I think you're really playing with fire. If you're trying to short this here, then you're really playing with fire because, again, your stop loss has to go up here in this area and your target is down here, in which case you're not even achieving a 1-to-1 risk reward. Okay, so this leaves you with 2 options. Either you wait for another retest up here in this area. Okay, so another retest up here, maybe even a sweep of today's high, because it can happen. Notice what happened back here, right? We got the breakdown through here. We got the first retest, second retest swept the first one. So we could still get a wick up here in this area. So the options here, in my opinion, are you either wait for a retest up here in this area, or you are looking for a sustained break below 60-50. Okay, and even if you are getting it up here, right, you have to think that in order to achieve a favorable risk reward, which for me, and look, it's going to be different for everybody, but for me, that is a 3-to-1 reward to risk, where my reward is at least 3 times my risk. So if you are even getting it up here in this area, right, with a nice, comfortable stop loss up here, then your target has to be this imbalance down here, if not these lows. Because even if you're targeting this level down here and getting it up here, your risk reward still isn't going to be favorable enough, at least, again, just for me, right? That's just my opinion. But for the way that I trade, though, I would need to be targeting lower levels. Now, we could still see down here, and some of you may have seen this before, okay, this pattern before, and said, well, this looks like an inverse head and shoulders, right? So what if we get the market coming down here, testing this level, and then bouncing from here, and we get something like this, okay? Now, that could happen. Of course, that could happen, but I don't see this as an inverse head and shoulders simply because an inverse head and shoulders should occur at the bottom of a trend without much to the immediate left. And as you can see, this price action over here, in my opinion, tells me that this is not an inverse head and shoulders. Now, of course, that could change, okay? But if we had seen something like this, though, where the market moved lower, then it started to form a inverse head and shoulders down here, that would be a little bit different, right? Because there's nothing over here to the left. But because we do have this price action over here, in my opinion, instead of an inverse head and shoulders, I simply see this as a range-bound market. And furthermore, guys, the other reason why I don't think, at least at the moment, that this is an inverse head and shoulders, and I am relatively bearish here, is what's going on with the US dollar index, the DXY. Okay, so be sure to, guys, if you are enjoying this content, be sure to subscribe to the channel and click the bell icon for notifications. Because unlike a lot of channels out there, a lot of the videos out there that, yes, I've watched, they don't give you guys a lot of actionable information. It's really just kind of the market could go here or it could go there. And I think that I do kind of differentiate myself a little bit here on this channel and website because I do give you guys actionable information that is, of course, just my opinion. It's never financial advice, but I really do hope that this information helps you guys to navigate these markets successfully. Okay, so when we look at the DXY, the reason why I don't think that the New Zealand dollar, at least right now, is not bullish, okay, is not an inverse head and shoulders, is because we do have, first of all, the DXY moving within this massive channel here that we've talked about in pretty much every video recently. So I'm not going to go over this too much, but you can see that we have this huge channel that's developed and the market is coming off of this low. So if this pattern completes, we are looking at a move over the coming weeks and months up there toward 109 to 110. Now, the other reason that I am still bullish on the US dollar, and I think that that could bode poorly for something like the New Zealand dollar, is the fact that we had this fake out down here from this smaller channel. Okay, so we saw the market come down here, make a failed breakout attempt below this. We got the reclaim up here, retest as new support, and since then we've had a rally. Now, we've also seen the DXY close back above 105.5 to 105.6. So we've also talked about this in recent videos as well. Okay, so you can see here that we are seeing the market start to establish itself above this area, okay? So this right here is also critical because it puts the DXY back here within this range. In which case, as long as the DXY is above 105.5, then you have to think that this up here, 106.5, is going to be the next target. Now, that could also line up with the New Zealand dollar testing that 60-50 area that we talked about. But the bottom line here, guys, is that when you look at the DXY, and this could change, right? Markets are dynamic, so you have to be as well. But when we look at this here, we look at this channel that has developed off of these highs back here and these lows, the fact that we have this failed breakdown attempt and we have this imbalance from back here, right? I do think that this up here is where the DXY is headed over the coming months. So as long as the DXY remains constructive here, that is going to be my longer term target. So flipping back to the New Zealand dollar, that could easily, if we do get that, that could easily put this market back down here toward these lows, which, remember, this is just a range-bound market, right? We're just seeing this here from this market. So if we do get a continuation from this breakdown right here that we talked about and a sustained break below 60-50 over the coming days and weeks, then that could absolutely open up this imbalance down here from this candle and potentially those lows around 58.70. Now, of course, that could change if we see the New Zealand dollar start to reclaim this trend line right here, the short-term trend line on a daily closing basis. So in other words, if over the coming days we were to see either from current levels or down here at this level, okay, come up here and take out this level, close back above, then that of course would be bullish toward these recent highs around 62.16. All right, so again, markets are dynamic, guys. You have to be as well. Nothing is set in stone and you have to move with the markets. But right now, we do have a confirmed breakdown here from the New Zealand dollar. You can even see where we did get a retest here today, right off of the level we discussed last week. Subscribe to the channel and smash the like button. And don't forget to join us in VIP. Grab your lifetime access to the trading course and also the real-time group in Discord. See the link in the description of this video, or if you're on the website, click on that join VIP link. Trade well out there, and I will talk to you again tomorrow.